Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Phillips. He's the Chief Investment Officer over at EventShares, and we're going to focus on third quarter policy update and understanding the Trump administration. Thank you very much for joining us over at MarketSite, Ben. And let's get right into this. There are two major Trump administration policy priorities that everyone needs to understand. What are those?
Yeah, well, I mean, I think first trade is, we think, the biggest thing people should be watching. We think it's, you have to be seeing what Trump is saying and his administration is saying. And then, I think the immigration thing, that's not going away. So you clearly see Trump is still talking about immigration. He's talking about a wall. And so he's using that as a negotiating point in a variety of different policy places. So it's something we're watching both of those things pretty closely. So do
you think trade's going to be the number one headwind for the markets this year and going forward?
We do. And, I don't know. We took a little bit of positive cues from the European negotiations. I mean, some people said the U.S. retreated. We actually saw that was a small win for the Trump administration. In his head, he said, I got Europe to back down and actually agree to more open trade talks. So if these kind of escalations result in something like that, I think that's a positive for markets. We're still concerned, though, it's going to escalate more and more to a point where it actually does impact risk assets and you see stocks sell off.
It seems to be that the tweets and the headlines are out there virtually every single day, and the market, I wouldn't say is ignoring it, but is digesting the news a little bit better. Is that a concern that there could be too much complacency, or is this possibly, these are negotiations that happen behind the scenes, they're just being brought to the forefront?
Yeah, and I mean, that's a tricky one. I mean, I think the thing is with the Chinese government, they're, I think, more about the behind the scenes negotiations, and so this overt public type of negotiation style is not their style. So I think it actually makes them more hesitant to come to the table with the Trump administration and makes it kind of a more precarious situation for just markets. So, we're watching all of these things and analyzing them just like everyone else. But what we're really trying to do is look through to the actual policy making. We're looking at what Congress is doing. We're looking at CFPB deregulation. We're looking at specific areas of policy that we think you can angle and position portfolios.
What other policies are you continuing to watch?
Yeah, so defense is one that we think defense stocks, they had a sell-off in late April on the North Korea talks. Everyone said global peace, it's bad for defense stocks. We were buyers on that sell-off. We thought that was an opportunity to pick up some good values in defense. And we still like a number of companies in defense. We like the ones that have nuclear exposure and have, submarine and shipbuilding exposure. We like the F-35 builder. Everyone knows who that is. And so, we like specific spots in defense. We also like healthcare. We like healthcare modernization. So we like companies that are positioning healthcare kind of for the future. So think telemedicine, think even home health, and there's some areas there that are interesting, and then just the top-notch providers in healthcare too. And then lastly, financial deregulation and overall deregulation is a big theme in the portfolio.
Would you handicap Trump for a macro trade?
No, I mean, I think we've said it's a fool's errand to try to handicap Trump, and I think what we're doing is we're looking again at the underlying policies that we think are actually going to impact stocks and ones that we have the highest conviction, and that's what ends up in our portfolio.
All right, and to wrap it up, coming into midterms, just over 90 days.
Yeah.
So do you think there's going to be some midterm volatility in the markets?
I think so. I mean, and it all depends on kind of what happens between now and then, and that's 90 days is a long time in the markets, right? And there's a lot of macro things going on. So I think what we're looking at is we think the Senate, Republicans probably hold the Senate at this point. The House is way too close to call, and I think it's too early to call, frankly. And I think we'll see the outcome there. If there is a flip in the House, or even if the Senate somehow surprises, I think that would cause us to rethink how we're positioning the portfolio for 2019.
All right. Well, we look forward to having you back in October for the Q4 update. I'm sure it's going to be a very interesting narrative going into the election.
Yeah, thank you, Jill.
All right, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.